So today we're here, right? And if you are in this room, I do presume that you probably do not need further introductions on the topic, right? So you have certainly seen that the US has moved together with a number of other markets in North America on the 22nd of May this year. We may have all seen the outcome of this, which has been claimed as being quite a success, and certainly, indeed, it was very successful from the operational perspective. We will discuss, indeed, what other elements we can be drawing from the move as lessons learned. But today, particularly with my panelists here, I would like to discuss the questions related to the costs that we will need to be facing during the move, as a result of the move. So despite the fact that we don't discuss the date any longer, which has been announced by Verena right now and already yesterday in the report, we will be facing this cost and hence need to prepare. We will also be discussing how to make sure that we do maintain the high levels of settlement efficiency despite the move to T+1. And later on, I would still like to ask you the questions with regard to the governance and whether indeed the timeline is comfortable for all of you as well. But so today, we do understand that obviously ESMA has done quite a detailed risk assessment, cost-benefits assessment of the move and has announced that we will be moving. So it's not any longer the question even of when, right? It is really the question of how. And so now, by chance, we understand that the date of the move is exactly the same date as the one of the UK. Luckily for us, I would say, right? Because with all the elements, and we have heard it also from Verena, the element of alignment is certainly the one that has been the most important one for this decision, right? And so together with me on this panel, you have quite a good expertise. So Suzanne Yavari from EFAMA, Andrew Douglas, who is the chair of the UK Accelerated Settlement Task Force, Alessio Motola, the CEO of Euronext Securities Milano, Andrea Gentilini, who is the top regulator, right, helping us with all the questions with regard to the CSDR and settlement efficiency within his role also as ESMA Task Force chair, not only CSSF representative as well, thank you for that. Hazard Sanchez, who is just next to me indeed, and he's chairing the ECSDA Settlement Working Group on top of his job within the SIX group. So thank you very much to all of you for being here together with me. Perhaps my first question will be addressed to Susan, right? Given that the main cost benefits that we have been expecting are more for the users of the CSDs, so really for the issuers and investors. And so, Susan, as a representative of the buy side, indeed, perhaps you can be telling us what have been the thoughts from your perspective with regards to the profits and losses that you do anticipate as a result of the move.
Thank you. Thank you so much, Anna. Thank you to ECSDA for inviting me and for inviting EFAMA to be on this panel to represent the buy side. I agree with you, Anna. It's a very exciting time. I mean, I'm pretty sure you couldn't have planned it, so it was just a very happy coincidence that we now have ESMA's recommendation on a date, and I think there's a bit of a buzz in the room, sort of outside of these panels discussing that date. I'm very happy to speak to you about costs from the buy side. And before I get into any specifics, maybe take a little step back and just share a few reflections with you on sort of how the buy side has approached this. And I would kind of travel back in time to when the SEC was still considering the change and they hadn't yet announced the time. And I can tell you, I was hearing from very senior people in my industry coming to me and saying, if US T+1 is happening, then it's happening here in Europe, and we need to get, we need to get going, we need to get marching on this. So there was never really any question about costs and benefits and sort of these, detailed analysis. There was this understanding, this gut visceral reaction that if the major market like the US has moved to T1, then the rest of the world has very little choice but to align quite quickly with that. So I think that that's kind of important to register. The second point I want to make is, about the US transition itself, right? Because, we waited for May to come, and then sort of a few months out from May, the readout was very positive, right? Really good story on settlement fails. Affirmation rates were actually up. So it was a very successful transition. And I want to say, the European buy side can take a little bit of credit for that, okay? US market, 20% is global investors, okay? So non-US investors. So that 20%, we're pretty significant, I would think, in that 20%. It's down to our European asset managers, the work they did, the changes they made to their work streams, to the processes that they have internally to ensure that on T0 now, they're able to do the confirmation, allocation, affirmation, and even the FX, which was a whole story in itself. So we're already partially operating under T1. And there is this gravitational pull towards T1 that will kind of keep dragging us there. So I'm awfully glad that ESMA has now come out with this very forceful recommendation. Then maybe a final thing, Anna. I think, what do fund managers want? They want to operate in an environment where there's a least amount of frictions, right? And when you have these two settlement cycles, you're creating quite a lot of friction, you have operational complexity, and at the end of the day, you have, of course, cost because there's an important funding cost. So I won't go too much into the detail, but we have, 6 months out, we have captured those costs. So when you're looking at a classic mutual fund, you're looking at 1 basis point to about 2.5 basis points potentially for that additional day of funding that wasn't there before. And on the ETF side, the same thing, except that we have, of course, on the ETFs, you have an intermediary, you have the authorized participant, they're taking on the cost, but you're still seeing it in the market data. You're seeing a premium to NAV gap, and it's extremely pronounced on the Thursday. And there's a Thursday effect, which people might hear about on ETFs. And that, of course, has to do with the fact that you're trading on a Thursday. You're having a US security, so you're an ETF that invests in the US. You have to settle that trade the next day. So you have to borrow, you have to be you have to come up with the funding, but you won't see the cash. The T2 only kicks in on the Monday, so you're having to cover 3 days. And so people are avoiding trading ETFs, and we're seeing that. We're seeing a massive premium to NAV gap because of this Thursday effect. So these are all things that we're hoping will go away with this alignment that it now seems much more within our sights.
Thank you very much, Susan. Yeah. And indeed, particularly this Thursday effect is also very well described in the ESMA analysis. So I have to admit, the very high quality analysis. Thank you for that, Andrea. I'm sure that you're here for something. Thanks to ESMA staff, to whom I'm sure many of us will be passing this message as well. But perhaps, so basing on what you have just said, I would like to show a couple of slides here with regard to particularly indeed the costs of the move altogether. So I'm very thankful to Barnaby Nelson, who is here, I think, in this room as well from Value Exchange, who has been very helpful for us, instrumental, right, to all the community for the research that they have done. And so what we see is still something that we do deserve to be knowing, so that we're better prepared for the future and that we do spend our time to preparing in the right areas. So you will see here that well, it's still for the US move, right? So it's still very complicated for us to predict what will happen exactly in the EU, whether these figures will be materializing or not. But what I wanted to highlight here particularly is that we do have quite important costs on top of all the benefits that obviously we hope to be getting. So the clearing margin is also represented here on the slide, but what you still see is that there is quite an important funding impact of dislocation, and that there are also quite significant costs, particularly for staffing, where you see that across the world, indeed, there is quite an important additional effort that needed to be made by the firms that have participated in this survey, which includes all actors, right, in the area. And so another point, sorry, I think I'm not seeing. Yeah, so, but that's already indeed quite a good representation of the of some of the ideas that I also wanted to get the feedback on, particularly from you, Andrea. So within ESMA, indeed, I'm sure that you have dived deeper, right? It's extremely complex to see which road we will be taking, and hopefully, indeed, seeing that we may be having the chance today to prepare better, to automate perhaps a bit more, and we will discuss indeed all the elements that will be helpful for us to get there. But by knowing these figures, I do hope that we will be helping to improve them in the future. So what's your perspective on the costs versus benefits as well that have been analyzed by ESMA?
Okay, well, first of all, I thank you, Mark, and ECSDA community for the invitation and the perfect timing to have organized the conference the day after ESMA decided to publish the report. Very, very, let's say, outstanding. So let me take, I take a few minutes of your patience, but I want to take a slightly long journey. CSDR came as a partial response to the Giovannini barrier, but it came out together with a lot of other regulatory initiatives after the great financial crisis, after the Lehman default, problems with other banks, intermediaries, insurance, but also with the sovereign debt. What is important to remind is that all those initiatives, for instance, have introduced something that is completely new in Europe. It was the transactional reporting. This has been introduced by EMIR, followed by MIFIR, complemented by SFTR. What I've observed, and at the time I was member of the community of advisors, consulting firm, is that the industry, the entire industry, missed the opportunity of this regulatory tsunami that offer the unprecedented opportunity to, let's say, cancel and replace all legacy system that exist at the time. Unfortunately, these end up with adding additional patches, adding additional elements to try to comply with in a way which I have to say that if we look at the data quality is not sufficient and good enough to comply with regulation. And therefore, the opportunity to remove the legacy system has been, let's say, lost. What I see today with T+1, and I'm happy that has now in the report defined and provide a clear date, which accidentally is the same as UK. But the point is to deliver something that has been clearly asked by the industry, a clear date, and ideally the same date as in UK. So this gives to the industry 3 years. And what is important is not to lose the opportunity of every single minute that give us those 3 years. Meaning that for me, the next 6 months are the most crucial ones. Because if we meet again in 6 months from now and the situation will be more or less where we stand today, well, this is a real issue. And this is a real issue not specifically for market infrastructure, and we know already. We had extensive interaction with the community at the consultative working group of CWG, the dedicated workshop that I asked ESMA to organize in September last year on settlement efficiency, the same dedicated workshop on T+1, that financial market infrastructure are technically already able to settle even in T0. The problem is to bring all the community from the end investor to the CSD to this journey. So that's why it is important not to waste any single minute in order to prepare all projects, big or small, that enable each single institution to embrace the T+1. T+1 is an opportunity. You have a 3 years windows. Don't waste the opportunity. You ask us to give a date. We give a date. We give a date with a sufficient, let's say, time before. Yes, somebody can wait until the level 1 will set into the, let's say, stone T+1, but those can start already. And in this joint statement, ESMA, Commission, and the ECB delivered few weeks ago, well, they invite, irrespective of the report, irrespective of the governance, irrespective of T+1, to start to think how to implement T+1, how to embrace the community of clients, community of participants, community of issuers, in order to be successful in this move. What this year's the Art Task Force I have the honor to chair has been asked to deliver has been done. I can say that our job now is finished on this particular aspect. We deliver in advance, because it was supposed to be delivered at the latest by the 25th of January. We deliver technically several weeks before, so now it's for you to act.
Thank you, Andrea, and be reassured that we will certainly use this time immediately, so start working immediately on the roadmap indeed ahead of us. Alessio, Jesus, do you have anything to add on costs? Yes, please, Alessio.
Yes, thanks, Anna, and first of all, good morning, everyone. I think that if we look at how Europe adapted, the adaptations that were undertaken, to get ready for May 2024, I think that to a larger extent we can name it a good success. However, in terms of cost and operational challenges, we have seen, things that, did not work, let's say, perfectly as we expected, especially in the space of multi-listed securities. So we do have, in Europe, securities that are traded on European trading venues that are issued in the US. And for which probably we could have adopted a more harmonized approach in the handling of those securities, especially for the management of corporate actions and cash distributions. I think we missed an opportunity there. However, the challenges that materialized as a result of that were handled. But of course, it creates a cost for the CSDs and for the participants of the CSDs. And so I think, yes, that was something that we could actually take as a lesson learned. And I'm particularly referring to the fact that some markets wanted to manage those corporate actions using the sequence of key dates that is applicable to T+2, so to what it's actually today in Europe, whereby some others, as Investor CSD, wanted to use the T+1, so using different X dates. And this is actually created the need for the proliferation of market claims, of things that nobody like. Market claims are ugly, market claims are costly, and therefore, that was not really, ideal. So I would say that these were the main elements, but if we take it to a broader context, I think adaptation were good, and I think it was a good success.
Thank you, Alessio. So obviously we could have been harmonizing, right? But on a solution which was unfortunately not acceptable indeed by the participants particularly. But at least there was a possibility for us to be having the harmonized solution. But certainly the misalignment will now help us. Well, if we do aim at removing indeed the misalignment, that will help us certainly to be then not having this struggle with regards to the difference of settlement cycles. Jesus.
Very briefly, I just wanted to thank you, Andrea, especially with regards to encouraging the communities to take these things very seriously from today, not wasting a minute. So even today we are late. So because even in terms of cost for the CSDs. Of course, in different layers, trading, clearing is probably the same, but CSDs, we have an important role to coordinate the communities in order to move forward, because at the end it's a kind of success of community. Doesn't matter if a CSD, a CCP or whoever is ready. The question is if the community, the entire market is ready. And another is, in the case of SIX, also we have another question, another peculiarity, because we are in two major countries, two legislations, in fact, Switzerland on top of Spain in this case. So for sure, we have to be very ready to support the discussions and all the work that we have to do also in this legislation in order to, for sure, our intention will be supportive on coordinated date. Of course, October 11 is going to be a kind of big bang for everybody. So for sure, we will be there. Well, I hope so. So we have to speak and we have to see. So the question is, don't underestimate only the cost and the efforts on terms of technical, functional, and operational questions, but also in terms of coordination and to be sure that we are on time.
Mm-hmm. Thank you, Jesus. Andrew, now to you. So Susan was just saying now that for them, the decision to be moving to T+1 for Europe was taken when they have seen the US move, right? Within the CSD community, I would have to say that this tipping point was when the UK has decided firmly that they will be moving to T+1, that on our side, we have changed our mind and said to ourselves that due to the flows, right, the trades which are settling in Europe, it will be impossible for us not to be moving, right? And hence the fundamental nature of the alignment within the entire region with the UK and Switzerland. So how do you refer then to the costs? Are you prepared to this cost? Have you anticipated them? What's your thoughts there?
Thanks, Anna, and thank you for the kind invitation to speak here today, which I hope is a very visual reflection of the fact that the UK and the EU, we are important to each other and we will need to work together. So I was very pleased by the announcement yesterday that we will continue to work together as we have been doing for the balance of this year. In terms of the tipping point for us, very clearly, and I think the statistics are the same for the European investment market. Susan talked about how important the US is to the EU. The UK also has an important relationship with the US. And if we're going to be brutally honest with ourselves, once the US moves, the rest of us have no choice. So there is not really a huge amount of benefit from prevarication, because we're talking specifically about the costs. There is a cost to the investment community of being out of alignment with the US. And in the UK, we decided we would address that as soon as we possibly could. What we didn't ever want to do was simply swap the cost of misalignment with the US for the cost of misalignment with the EU. That's not a good trade for us. So it is very key to us that Europe has decided to move at the same time. That was always our preferred option, was that we would all move at the same time. So, as I said, I look forward to us being able to work together to achieve that goal in the future and keep the costs down. I think in the previous panel, I think Phil talked very much, and it's certainly a line that I've been promoting. We sometimes forget why we're all doing this. We're doing this because me as a pensioner and all of you people as pensioners, when we retire, it would be great if our pensions had some money left in them that hadn't been absorbed by the frictional cost of transaction management. So it is important for us to get this right. And I was interested to see the slide that you put up, Anna, with the results from Barney's survey, which clearly demonstrate that not only is there a cost for doing this, there's also a cost for not doing it. And that's all that, on the other slide, that was all those red things.
That's the cost of not doing it. The blue stuff is the cost of doing it. And all of the costs of doing it were negative, which is great. And all of the costs of not doing it are red, which is a bad thing. And it supports a number of and I hope it's something that we will touch on a lot during the course of today. And that's the importance of automation. These bottom two lines, they're critical. We've got to minimize those. And the only way we can do that is by automation and starting now, to Andrea's point. You don't need to wait till 2027. And in actual fact, what I hope is that October 27 will turn into a massive non-event, because we will already have migrated piecemeal during the course of the next 3 years. Those of you that have heard me talk on this topic before will know one of my favourite statistics at the moment is 5% of trades in the UK settle on T+1 today. What I want to know is why you're not doing that, why the other 95% are not doing that, because there is no reason why they're not doing that. And I'm sure there is a very similar statistic for the EU. I'm going to count it there.
Thank you, Andre. Certainly, there is a lot to do for us in terms of follow-up. But now I would like really to zoom deeper on the roadmap, and you have already touched upon it, right? So one of the main elements that we have been mentioning in our own statements when responding still to the ESMA consultation was that we really were very concerned about the impact on settlement efficiency. I note that in the report that has been issued by ESMA yesterday, there is still a bit of uncertainty, of doubt. This is how it seemed from ESMA report, that whether the settlement efficiency will still increase, right? There is a hope there somewhere, or whether it will decrease. I would say that within the CSD community, the discussion has somehow already solved that question. But it can be interesting indeed then here to be first discussing indeed the views on whether it will be indeed impacting the settlement efficiency and how do we make sure that indeed on the date of the move, we are then not having a massive drop, which will be resulting obviously in the settlement risk and massive other issues for all of us going forward. So, but before doing that, perhaps I would like also to mention that in the ESMA report that there is quite a good explanation of the fact that massive segments of transactions are already settling on T+0 and T+1. So that's already a good positive matter that we need to be taken into account. So here, when we are discussing the settlement efficiency, we are particularly concerned within the CSD community about the impact on those that today do not settle on T+1 and for which we will need to be squeezing the timeline. Perhaps to open this conversation, Alessia, I will be moving to you then to be seeing indeed your views on what are the biggest challenges for the European post-trade ahead of the implementation of T+1 in your view?
Yeah, I think, Anna, it's all around settlement efficiency. I mean, making sure that we actually, maintain at least the level of settlement efficiency that we have, or even higher. And I think we can look at this topic by referring to the joint industry report, where basically ECSDA, and also in the ESMA report, it's indicated, deep dived a little bit onto flows that are basically, at the core of this question. Two flows that have a different speed and different level of automation. The first flow is the flow which is basically, the trades processing flow, which basically connects the three big layers: trading, clearing, and settlement. And as you mentioned, this flow already caters for T+0, T+1 activity already today, because we see a good level of automation there, a good level of STP rate. So we don't think that this flow will create challenges. The second flow, which is the asset provision processing flow, is the one which is probably more complex, and that based on which the settlement efficiency will actually, the success of the settlement efficiency will actually depend. And talking about, all a subset of processes that are, let's say, sequenced after the trade execution. Allocation, confirmation of trades, pre-matching, so trade details matching, and also, things like cash position management, securities position management. So this flow, which is very, complex, and today we've seen a lot of manual touch points, a lot of, room for automation. And so if during these 3 years we do not prepare, we do not really pave the way to strengthen this flow and to give the right tools, the right standards, the right best practices to actually, improve this flow, well, then probably this will affect the settlement efficiency.
Thank you, Alessio. Yes. So with that being said, I would like now to be then turning to the outcome of the indeed US move. And so as you see here on the slide, so despite the fact that we have all heard indeed that the transition to T+1 in the US was quite successful. And from the technical perspective, this is what we all, I think, believe was done, right? But here I would like just to attract your attention to this specific slide. So thank you again to Value Exchange for this survey. So what we still see is that even in that market, right, which is very different from the European market, which is mostly domestic market, which is mostly single currency market, etc. We do still see a light increase in the number of fails, right? So how do we refer to that? And here I'm turning to you, Jesus, as chair of the market settlement efficiency of the ECSDA. You have been diving deeper on the questions related to settlement efficiency. How do we ensure that in Europe we try to maintain the level of settlement efficiency that we have, and if possible, I know that we're probably dreaming a bit, but so how do we ensure that there is minimum impact on settlement efficiency?
Yes, well, I think it's clear for everybody that the main or one of the critical issues of shortening the settlement cycle is that the settlement efficiency will decline, or the question is how much and how long. Mm-hmm. Because for sure the intention is that should be as minimal as possible and as short as, so temporarily only, coming back again to good efficiency rates. No. Well, here you can see that the settlement efficiency that today we have in T2S clearly has been improved, definitely in amounts. Of course, in volume, probably we have to still pushing for that. So CSDs and the industry in general, we are already very aware about the need to still work on improving the current settlement efficiency rates. It's not a question that we are doing because T+1. Mm-hmm. For sure not. CSDs from many years ago, we were working with the communities, because at the end, and again and again and again, I will repeat many times, it's a question of communities that we should focus on those questions that are being bottlenecks for the being more efficient. And Andreas, let me tell you that one of the words in English that I learned the first time in my life was spike. Spike was a word that it was mentioned, at least for me, the first time in the workshop on settlement efficiency in your group, that a part of being the averages of the settlement efficiency is critical, that we do not only focus on average, which obviously, in fact, is a kind of important in order to see tendencies, in order to see systemic questions. But the critical question is also to see what happens sometimes that suddenly the efficiency drops. Sometimes it goes up, but okay, because it's good, we do not have to see too much. No, we have to see the worst ones. So it's important. And let me tell you, I took the globe, as we say in Spanish, and in market settlement efficiency workshop, this last time, we had a special section to speak about two major spikes we saw in T2S in February and in June. And we had very interesting discussion and we had very good reasons. We don't like it, but at least we have the reasons, so which at least is the first step, okay? So I think, fully agree with you that it's something that we have to focus more in detail, but also we do not have to forget that we are doing some questions, some improvements. For sure, not enough for that, for ESMA, but we are doing something. But don't forget one thing. In case of T+1, and I'm going now to that one, but first, before that, in case of T+1, one important thing is that CSD's community, we can do whatever we can do once the instruction is in the system. But if you hear my sentence, the prerequisite is that the instruction is in the system. If not, CSDs we can have partial release, partial settlement, lot of functionalities, a very good algorithm to calculate how optimization can be better even. But at the end, if the instruction is not in, bad luck. For that reason, it's important that all layers, not only settlement, but also trading, clearing, community, every intermediate, push in order to have the instructions in. And later, we can speak about functionalities, features that we CSDs can put at disposal of the market participants. And this is partial settlement you see. Partial settlement is clear, one of the trendy topics also. That partial settlement, some communities are incorporating now to be implemented, so it's good news to know. But one important thing, from my point of view, and I finish, sorry, Anna. One thing is that how we can promote the efficiency. For me, there are two ways. The bad parents that say, look guys, you have to do it this way and this way and this way, or the good parents that say, you have options to do the things. You have to do the things well, but you have options. Please, use at your discretionary, taking in mind your needs, taking in mind your peculiarities, taking in mind how your customers are. But please, focus on your customers and do it in that way. So you don't have to do how to do it, but allow functions to do it in this way.
Thank you, Jesus. So there is a clear call indeed for all of us then to be looking at the quite a deep range, right, of the tools that we have already today, and certainly partial settlement is the one that we should be starting with, right? Andre, I'm seeing that you want to jump in.
Well, very quickly on this. If you can go back a few slides on the one on T2S and settlement efficiency.
Yeah.
Well, I have to, no, the previous one. I have to reiterate comments that I made 1 year ago, is that at the end, this chart, well, the previous one, but I know, let's wait for the, unfortunately, has a limited information. Because here you compare, and we are conscious that you compare pear and apple and peach. Meaning that inside of this, I tend to consider that there are also at the same time, settlement efficiency score for German Bund, but also for a corporate of a small cap issued in a relatively small CSDs part of T2S, which from my point of view, they tend to have and they should have a different level of settlement efficiency, which is fully understandable. So what we miss to have yet is a clear understanding of the cluster of CSDs, even within T2S. Settlement efficiency are different if and for CSDs depending on the type of instruments and asset classes they settle, depends on the type of number of participants, their related geographical location, because of course this impacted the bank holidays and so far and so on. So 2 weeks ago I was in London in the ECSDA Post-Trading Conference, and I shared this point of view because technically I'm an economist lent to regulatory and supervisory activity. So for me, settlement efficiency are very similar to unemployment rate. Meaning that the unemployment rate is composed of two main components. One is called natural rate of unemployment, meaning the rate of unemployment that is you cannot compress because it's the outcome of friction and system. So in somehow you cannot eliminate this part, which is also functional to the labor market dynamic. So what I would like to understand, and I don't have yet received the feedback, is out of those, let's say, 2% of settlement inefficiency in terms of value at the end, how can be compressed? And I echo the comments made by Dominic in the previous panel. In the settlement phase there is something that we can address, and we should address. And we need to identify the areas where, because per asset class, per type of instruments, we may have different level of settlement, natural rate of settlement fails. And we need to manage this. But then there is a work that the entire community has to do in order to improve the efficiency. We cannot, let's say, hide ourselves, yourself, your participant, behind the fact that anyway, we cannot compress more than what we have. Well, I would like to have clear evidence that you reach the zero level for what can be compressed. This is important because indeed we can work on it and we can accept, ideally, because in the law we haven't put anything about the level of settlement efficiency that we need to have, because we are conscious about it. And we are conscious that in the forthcoming work, which is linked but independent from the shortened settlement cycle, which are the potential amendment on RTS and settlement discipline, we can put something. But then I have another question, because I fully agree with what you said, Jesus. But we are puzzled between having best practices, and so a light regulation mainly on principle, and have a heavy regulation that dictate what institutions have to do. But the problem, in order to have the first one, which I personally consider be preferable because it's sufficiently flexible, is that the entities are mature to achieve the goal, to strive to perfection. While if this outcome is not achieved, we face market failure, and legislator ultimately tends to overreact. So if we want to have, and we blame that Europe is the factory of regulation, but in somehow we should also consider that sometimes those products are the outcome of a market failure to define best practices and stick to best practices. That's, so you cannot blame that to then we enter, because very often we receive input that, well, we should have this into the regulation, we should have this in the RTS, etc. So that's a real issue. That's why we are very happy to hear the feedback from the industry in order to how we should set the tone. But we need to be reminded what is the goal. This is our, let's say, objective that we need to achieve. Regulation are just tools to achieve that goal. We should not inverse, let's say, the order of priority. Thank you.
Thank you for this fundamental remark, Andrea. And that makes me also think that indeed when you have been speaking about the specific segments as well, and differences in terms of different transactions and instruments, we do need to be giving the floor perhaps to Susan. Sorry if I'm changing the order. So Susan, to you particularly to comment on the levels of efficiency for ETFs, and what do you think indeed we can be doing there, and what's your view then on the levels of settlement efficiency from funds industry perspective?
So thanks for that, Anna. And I do want to share with the audience that in our prep call, we said we would hold back on the efficiency discussion precisely because people would get excited. So this is us holding back. But yeah, to your point, I think I bring a slightly different perspective because, obviously, as firms that have to implement cash penalties, who've been sort of living under this regime over 2 years now, we have our views about the cost of maintaining that regime. I think the main point that we put, and I've shared with ESMA colleagues in the past, is simply that we lack granular enough data to be able to understand what are the root causes. And I think, by and large, when we look at progression on bond fails and equity fails, they've been quite good, and we've seen significant reduction. On ETF fails, somewhat reduced, but still kind of remaining, I think, fairly high. But again, we don't have access to the next layer down to see, okay, where is this happening? Are there clusters of CSDs where this is occurring? Is it with particular ETFs that are perhaps less liquid? Ultimately, is it a behavioral question? So maybe cash penalties or increased cash penalties could potentially address that. Or is it structural? Is it because ETFs are trading on X number of venues and settling on different CSDs and the inventory just isn't there? So my members are really actually very mobilized. We want to look at this. But do we have time to go and piece together the various CSD data? We don't. I mean, I can't bring that big an ask to my members. But if I could give them, here you go, here's a complete set of data. Here's the stuff that sits under it. Look at it. Tell me what you think is going on. Then we can start talking. Yeah, so that's the piece.
I need to comment here on the fact that even at CSD level, we don't necessarily have the very detailed level of information, right, with regard to what's happening exactly at the level of the underlying clients of the CSD participants. So that data really needs to be dug further and directly for each case by case situation. But thank you for these comments. So certainly we'll need to be then zooming further on specific asset classes to understand deeper. And I'm sure that Hazes is doing that, right? Exactly that within the workshop that he's sharing. But I would like to go deeper on the meat, right, of the roadmap. How do we make sure that we keep the right level of settlement efficiency? And here I will be restoring back the natural order and turning back to you, Andrew, to ask you indeed, how do you consider the roadmap? So what are the main elements of the roadmap that you have considered in the UK report? And I know that indeed you are being called Santa Claus, right, in the UK market because of the fact that you are starting to produce the Christmas gift for the UK colleagues and for all of us to be inspired from. So I'm leaving you the floor then to outline just the main components of your roadmap.
So that's very kind of you. I shall grow a beard and wear a red suit next time. Well, if Andrea can talk about unemployment rates, I'm going to talk about painting, because that's important. The quality of what you see in any paint job, whether it's on the walls of the house, whether it's on the car, it is reliant entirely on the preparation. If you prepare well, the end result is a good one. So to Jesus's point about spikes, I'm not terribly fazed about whether October the 12th shows a spike in fail rates, because it's the trend, it's the overall direction of travel that's important. It's the overall quality of the preparation that is important. So one of the sort of key lessons that we've learned from the US, and it touches on some of the points that the other panelists have related to, and things that are fairly obvious. Firstly, automation is key. And I've talked about it once, and I said I'd talk about it again, and I am. If people automate the solutions, the quality of their preparation will be higher than if they simply throw people at this at the last minute. So I don't want us to get into the situation that happened anecdotally in the US, where a significant proportion of participants were not fully prepared for the move. So automation will be important. Spreading that automation out over the next 3 years will make life a lot easier for other people, but for everybody. So again, that's a key lesson learned. And then the next one, which Andrea was kind of demonstrating there, is the support from the regulatory community. We're erring away from the need for lots of regulation. We're focusing more on the market practice side of things. And I think that's right, the right way to do it, because I feel that it is natural people do a better job if they're doing something because they want to do it, rather than because they're forced to do it. So we are working very closely with our regulatory community in the UK to produce a timetable, if you like, of regulatory support that can be brought to bear during the next 3 years. And I'm optimistic. I started off thinking we should be more on the regulatory side. But as we've gone through this, I have become fairly convinced that market practice is the way to go with the regulatory support. So I'm fairly comfortable with where we are now. It sounds like these are lessons which reflect well in the European community. As I said earlier, look forward to working together, because I think the two markets working together, the three markets if we include Switzerland in there, all working together to the same goal, that will actually produce the best outcome. That you can't beat peer pressure, market forces.
And if I can react to that, so the figure of the independent chair, right, within the European community will be really key in order to make sure that we are all very collaborative and that we have somebody who is indeed instilling the common approach towards the legacy that we will see here in Europe and across the entire time zone, then together with you. Thank you for that. Jesus, I will be moving to you because I think we need to be still mentioning what is it that we can be doing within the FMI community in order to make sure that we do support this move to T+1. From the ESMA report, again, I would note that they have specifically put attention to the fact that the trading venues are closing earlier in the US, so they close, the main ones close at 4. I've done my job, right? Reading yesterday evening the entire report of ESMA. Thank you for that, Andrea. So, but indeed, so they have 4.5 hours between the closing of the main trading venues and the CSDs, right? So that they are able then to process the transactions. On our side, so the report has been of the European Joint Industry Task Force has not been stating that clearly that we will be extending the time. And rather than closing earlier the trading venues, obviously within the CSD community, we have been considering what we can do at our side. So, Jesus, I'm leaving the floor to you then to comment on that.
Yeah. Well, the answer could be very easy to say, is that trading venues, the market has to close earlier, so the CCPs can send the instructions on time, so everybody happy. But obviously, fortunately or unfortunately, real life is not so easy. So at the end, absolutely fair what you have said. We have to, and CSDs have to work in order to look for a consensus, in order to look for solutions. And I think we have to incorporate two elements in this searching. Is late and flexible. Late for sure is something that we have to think that NTS, now 19 settlements, despite only T2S, other CSDs, ICSDs, there are not only T2S in their life, although it's very relevant. So NTS for sure should be under discussion to extend or to delay a little bit. Because if not, we have to think about closing the market earlier. It's a question of physical time. And the flexible parameter is the question is, one NTS or 2 cycles of NTS will be enough? Will be subsequent, one after the other? Or we have to extend to have more cycles, or even separate in the time, just to allow that some trading venues will close earlier and others later, or we can have from a different region investors their instructions a bit later. So it's something that I think that a proper balance of these two questions. Sorry if I don't concrete more. Today probably is not the day for concreting more, but I think moving around these parameters, and you hear me well, you think I'm saying that we had to delay. I'm saying that we had to change the current 2 cycles in T2S, for example. So you hear some messages, but for sure we have to sit down together, look for a consensus to everybody can take. So, because one thing that is important is that for sure NTS is not the whole day. We have until today, until 4 p.m. for the DBP, 6 p.m. for the free of payments. But if we delay a lot of instructions to the end of the day or near the end of the day, we will have important, very significant bottlenecks. And not only in question of settlement because we have changed instruction, which is very important also. But one important thing that we have seen in the market settlement efficiency workshop and in ECSDA settlement working group is the importance to settle as soon as possible in order to have liquidity in the market that allows further settlements. Because at the end, it's like oil. Oil starts doing the benefit at the beginning, but it's a second questions afterwards. The benefit is seen afterwards also. So, and partial settlement, for example, and I don't want to jump back, so don't scare. But it's important that partial settlement has a very good efficiency in that way to allow partial liquidity at the beginning of the day in order to allow subsequent settlement. For sure, we have to think about that.
Thank you. Perhaps we can be discussing the topic right during the entire day, I think, but at a certain point in time we need to be advancing and perhaps making sure that we still heard the point of view of Andrea indeed on the topic. And Andrea, well, I think I leave you the floor just immediately because...
just to say that we will complement in terms of tools in line with what the UK will do. And there will be potential changes in the RTS. This has been asked by the ECSDA refit on RTS on settlement discipline. And therefore, in this new chapter of new report that we have to release, we will, let's say, we are currently looking at the report that AMISECO task force will produce soon. We received the feedback and we reanalyzed already the feedback from the consultation, let's say, call for evidence on penalties. So we are working on it in order to see if there is, let's say, what is the appropriate, let's say, level of regulatory steer compared to best practices. We have to learn also, keep in mind the point of EMIR and the inefficiency of market to follow and then overreaction. So this is something that we're conscious, but we will do. So stay tuned because something will happen.
And then can we be indeed a bit more proactive on that, right? So in the US, one of the successes was the fact that there has been monitoring of the market readiness, of the levels of allocation indeed before that happened, right? So on our side, we have penalties, which is rather a negative post factum disincentive, right, to be late. Have you been looking at some positive elements that are helpful then to support the European competitiveness in comparison with the current environment that we have, which is more punitive and a bit less supportive to the EU global competitiveness of that?
Yeah, I mean, we are always open to hear and to look around. I will say that, as I said before, we need penalties are a tool to foster, to have improvement in terms of settlement efficiency in order to penalize those that could deliver cash or securities on time. We are also conscious that what goes and reaches CSD is the visible part of an iceberg that is constructed and built of hundreds, if not thousands, of transactions that are, let's say, processed by intermediaries, and only the remaining not necessary internalized settled transaction move to the CSD. So we are conscious that there are some technical features that are impediment, but the efficiency, as said, is something that is a mantra that every party in the chain should keep in mind. It's not, CSDs are just like the radar that look and measure the speed limit. They are not in the driving seat. So we are conscious about that. But then is the how, and even some education that CSD does with they do with their participants in order to facilitate that those participants are able and participate to client and so far. So there is a complexity to be done. We are conscious, but once again, the goal is reduce the settlement fails. If we are able to reach this, yes, we are happy, and we can eventually consider, because at the end, penalty will be tools not used if settlement is settled in right on time. So at the end, I don't see problems around having or not penalties, because if settlement is done on time, there will be no penalties. So having or not having penalties will be completely irrelevant from a technical point of view.
Okay. Thank you for that comment. And so now I think we have already exploded the time that has been allocated for this panel. I would like to thank all of you for this very thorough conversation, and certainly we will be following this topic within the ECSDA community. We will be deeply participating in the upcoming steps on the work, and we already know that there will be a workshop at the level of ESMA to prepare for the next steps of the governance. And so happy to be supportive towards all the efforts of the community and of ESMA, together with the European Commission and the ECB, to make it a success for all of us to the extent we can. Thanks to all of you.